Arbitrage Theory of Miller and Modigliani, Part 1. This is our 211th module of Financial Management. Before this discussion, we have already gone through the discussion of relevance and irrelevance of capital structure. And we have discussed that there are two theories which exist. The traditional theory, which states that capital structure is relevant, it has an impact on the value of a firm. Whereas we had a discussion on what is called net operating income approach, which states that the capital structure does not affect the value of a firm. In this module, we are going to discuss another theory or another approach, or we can say that another supportive argument for the theory which is called the irrelevance theory of capital structure. This argument or this theory was built by Miller and Modigliani, and that is why it is called M&M theory. We'll talk more about Miller and Modigliani in the next modules. Now let's have a look at what this irrelevance theory, Miller and Modigliani's argument is. The first one, which is the same as that of the net operating income approach, and that is capital structure is irrelevant with respect to the value of a firm. So if a firm wants to increase its value, that cannot be done by altering the capital structure or by changing the leverage. If irrelevance theory is applied, it is applied in a way that the concept of arbitrage was introduced by M&M, and they said that if we for a moment assume that the traditional theory or the relevance theory is correct, then in the market arbitrage will take place. Arbitrage is actually a process in which we buy an asset which is cheaper and sell an asset which is expensive if the two assets are identical. यानी बेसिक आर्ग्यूमेंट ये है कि ये मुमकिन नहीं है कि दो एसेट्स जो एक जैसे हों. In our case, certainly we'll talk about the stocks and shares, but even if we apply to any assets, arbitrage states that it is not possible to have two assets which are identical and they are selling at two different prices in the market. Why? Because everybody would like to sell the expensive asset and buy back the asset which is cheaper. इस तरह वो अपना कुछ पैसा भी बचा लेंगे और उनके पास वैसा ही asset भी मौजूद रहेगा. We'll explain this concept of arbitrage with reference to stocks in more detail in the next modules. But let's have a look again at the argument of Miller and Modigliani. They said that the relevance of dividend, saying that the two firms which are the same in every context other than the capital structure cannot have different prices in the market or different value in the market. ये हो नहीं सकता, और अगर ये होगा तो उससे आर्बिट्राज पैदा होगा. यानी जब हम ये बात करते हैं कि इन्वेस्टर्स रैशनली बिहेव करते हैं, रैशनल बिहेवियर का मतलब है कि हर इन्वेस्टर प्रॉफिट ज़्यादा से ज़्यादा कमाना चाहता है और जहाँ पर उसके पास अपॉर्चुनिटी है वहाँ पर वो उस अपॉर्चुनिटी को अवेल करता है टू एनहांस हिज और हर प्रॉफिट. So M&M argument is that two assets which are same, or the two stocks or the companies or firms, cannot be different in terms of their prices in the market. यानी अगर वो stocks या companies same है तो उनकी prices different नहीं हो सकती, otherwise arbitrage will take place. and second, the prices of identical firms which are identical in every aspect other than the capital structure cannot be different. तो हम इस मॉड्यूल को यहाँ पर समराइज करते हैं कि आर्बिट्राज का प्रोसेस मिलर एंड मॉडी गिलियानी ने इंट्रोड्यूस किया कैपिटल स्ट्रक्चर के हवाले से, और उन्होंने ये बात कही कि अगर ये बात मान ली जाए थोड़ी देर के लिए कि दो एक जैसी कंपनीज जो हर लिहाज से एक जैसी हैं लेकिन उनके कैपिटल स्ट्रक्चर यानी उनके डेट और इक्विटी रेशो में फ़र्क है, किसी में कम है लेवरेज और किसी में ज़्यादा है, और बाकी तमाम चीज़ें एक जैसी हैं, तो उनकी मार्केट प्राइस डिफरेंट नहीं हो सकती, और अगर होगी तो लोग आर्बिट्राज करेंगे, यानी वो महंगी कंपनी को के शेयर्स को बेच देंगे और सस्ती कंपनी के शेयर्स को ख़रीदेंगे और इस तरह कुछ पैसा बचाएंगे। इसकी मज़ीद डिस्कशन हम अपने अगले मॉड्यूल्स में करेंगे।